Alright, so what's up everyone? In today's call, we're particularly going to cover a lot of things. Um, so starters, pretty much I'm going to be hosting an FundedX giveaway, and of course it's going to be primarily on Twitter, but of course I'm going to send it in announcements in my server of course as well. Um, and it's pretty much in conjunction with their annual, or pretty much their weekly 25% mark a giveaway, which FundedX is doing every week in their own server. So please join their Discord server and follow their Instagram or Instagram and Twitter, of course, and of course YouTube if you guys want. Um, but I'm gonna be hosting a 20k giveaway later this week, right? Or on Monday or Tuesday. Let's just see. Could even be Wednesday. So no clear date yet, but I'm at least going to be hosting a giveaway real soon with FundedX. So please go in and follow them. Now, of course, second thing we're going to talk about is actually the news delivery paradigm, which is a thing I've covered a little bit, not anything massively. And I'm going to, of course, like, now you already know what the externals is, right? Externals, right? What that pretty much stands for is intermarket correlations between an underlying asset and a main set of assets, alright? That maybe does not really tell you anything, but for the people which knows, they will know this, alright? So they will know pretty much what the externals is now. Of course, some of the things in this call will be real great, because in this call we'll cover more or less half of the other uh, rest of the things which you guys will need more or less to succeed, right? If you know this, right, you're gonna pretty much succeed. Like, it's 100% guaranteed, right? Only thing which now maybe less left is psychology, but of course psychology does not really matter when you have the data backing your system, right? So of course, then we're overall going to talk about, this is the main topic, we're going to overall cover how to find an overall bias using the things I've previously covered, and that was pretty much the other previous videos. And then of course we're going to substitute that, and we're going to talk about overall how you do this in, of course, the upcoming week. So we're pretty much going to predict where the DX will go on a monthly basis, weekly basis, daily basis, 4-hour basis, and intraday. And I'm going to show you all of this and actually going through my bias and predictions for the DXY, but not only the DXY, also EURUSD. So I'm going to cover the monthly, the weekly, the daily, the 4-hour, and the intraday. Alright, what I will think will happen, my bias, right? Going into it. So of course, next week, this is the news paradigm, right? And why I call it the news paradigm is just because I don't see news the same way as other people see news. So what a lot of people see news as is, of course, just some random thing which influences the market, right? But all of these news events, alright, have a purpose, right? And it's not the purpose which, some normal retail people would say, or institutional people or such. They see news more or less as some fundamental thing which, of course, alters the market. That's literally it. Like, they see it just as fundamentals. They're trying to predict the economics with it, right? I instead see news, and news is, and why news has an impact, right? This will answer all of your questions, just because it's a measurement of pretty much interest rates. All of these news events will have pretty much an influence on interest rates, and if they're going to be lowered, or if they're going to be overall stopped for a while, or if they're going to be hired, right? And what pretty much people will try to see, like, this is not fundamentals, this is literally change in interest rates, alright, right in front of you guys. So all of these news events, and you can literally see it, because the more impact it has on the Fed's decision of changing the interest rates, the bigger impact of news it is. So for example, CPI is a massive news event compared to a lesser news, which of course have lesser amount of average pips it moves the market. So for example, unemployment claims, right? CPI will have a bigger impact, as it has a bigger impact on the Fed's decision, or the central bank's decision. And now we're not talking about the central bank just one central bank, multiple central banks, which overall moves the market, right? So the interest rates, something which the central bank sets, all right, and we're trading with the central bank. That's what we're trying to do, right? We're not trading with the banks, we're trading with a real central bank. At least now we're talking about foreign exchange, all right? In commodities, indices, it's a little bit different, right? But when we're trading foreign exchange, we're trying to trade with the central bank, as those, that's the main entity, which of course alters the market, right? That's where all the volume is. And of course, the more impact it has on the change in interest rates, now we're talking about the news events. So the more, this is how you should think of news events, right? It has the more, the news which has the most impact on the Fed's decision of changing interest rates will have the highest impact. All right, it's not about economic data. It's not about economic stability. It's not about predicting economics here. It's not fundamentals. It's predicting the interest rates. That's what you should focus on, and not predicting the interest rates. Just pretty much know that the news is not a measurement of economic health. It's a measurement of change in interest rates caused by the central banks. Alright, so pretty much this is the third part here. So of course, what makes up a model, right? This is super important because for me at least, I think the market is particularly moved by the central banks, right? So the thing I look at is of course always, and this is the two existential things, pretty much two main things I focus on without overcomplicating it. And this is how I see the markets, right? So of course you may have another belief than me. That's totally fine. However, alright, I just believe the markets pretty much move by direction, move by the change in interest rates, and I believe that's why we talked about it, last. And of course we're gonna move back to it because I'm overall gonna show you what I think the market will do based upon the change in interest rates, which I call the first underlying dynamic, alright? And of course, that's just the second subsection where we have multiple subsections of the first underlying dynamic, alright? I'll not cover any of them as those are just for my students. However, it's something which you have to have as the greatest of importance, alright? The news literally determines the direction of the markets as it determines the change in interest rates. That's what you have to remember, alright, as the interest rates, at least for foreign exchange, alright. Now we're not talking about indices, we're not talking about commodities, has direct impact on foreign exchange market, which I trade, right? I don't trade indices, I don't trade commodities. So more or less the only thing which makes up for any of my models, alright, I have two. I have the TSE and I have the STA, is direction and liquidity. Alright, direction is important because overall the direction we get from the change in interest rates, but of course I'm also going to cover buys today, which is another part of it, without overcomplicating and introducing you guys to external factors, and you guys know what external factors is now. And liquidity, alright, those are the two main things I focus on. I take away all of the rest of the things, all of the, crazy things which people use. So for example, like I don't look at anything magical. I don't look at no indicators. I just look at where the liquidity is, and I look at where overall the Fed will take the markets to. Alright? And not only the Fed, like, not the Federal Reserve. I'm talking about all of the central banks when I'm talking about the Fed. Now, of course, you have the model already, which, of course, maybe is the one you have chosen. So maybe you guys have chosen actually to trade the mechanical TSE, which, of course, is only built on liquidity. Why is it only built on liquidity? Notice that I did not introduce you guys to market structure shifts. I did not say anything about that. Only thing we use is time, alright? And we use price. We use a total soup, alright? That's it. You don't need anything else. You don't need to see a market structure shift. You just need to know which direction the market will go towards, and then you have a TSE because you have time and then you have price. Simple as that, right? Simple as that. You don't need to overcomplicate it even more than that. You don't need to re-enter on a fair value gap. You can literally soup it, all right? However, for you to soup it, you need the direction, you need a narrative, and that's pretty much what I will try to cover in this video, and try to show you guys how you get the direction, right? And that's literally what it says. So of course, this is literally what I'm gonna tell you, alright? everyday buys is unachievable. It's something this is a quote from ICT, right? So pretty much what he means by that is that you can't have a direct narrative every single day, right? You can be range bound, etc., etc. However, this is how, at least this is the steps I take to find the direction on the given asset I'm trading. Alright, so the number one thing I'm actually doing is determining which type of order flow the market is in, or which state the market is in. Alright, so of course, have we institutional order flow, right? Or is the market reaching for a higher time from drawn liquidity on objective, or finishing an IPTA program? So, for example, like which I wrote here, reaching for an IPTA program target. All right, this is literally like an original consolidation, etc., on a higher time frame. Of course, it can be on lower time frame. It depends on which time frame you're trading on and which time frame you like to have a bias on, right? So, for example, if you're trading on a 15-second, maybe you don't need a higher bias than a 4-hour. All right, that could be a max intraday time frame, right? Now, of course, there is also in a bank order flow, is the market literally repricing for them to reach and reverse and reach for the IPTA program targets, right? Where we're gonna reverse, at an institutional order flow entry. All right. Then of course what I'm doing second, and of course this goes hand in hand with determining institutional order flow, right? Is doing a top-down analysis, or goes hand in hand with determining the order flow. Maybe I said institutional order flow, but I meant order flow. So of course, pretty much goes hand in hand with doing a top-down analysis of the different time frames of your choosing, right? So you pretty much can stay at the 4-hour, go lower from that, or you can pretty much go from the monthly, which I prefer. I prefer starting on a monthly and then going down from monthly, weekly, daily, 4-hour, 1 hour, and 50 minutes to 5 minutes. I actually skip most of the time 1 hour and 50 minutes and go straight down to the 5 minute, as we pretty much get the narrative from the 4-hour and daily. I think 4-hour is the lowest point. And why? That's simply because the 1 hour and 50 minute does not really give me any particular information if I'm not searching for alignments in PD arrays or strategic PD arrays. Then in that particular case I could possibly use the 1 hour and 50 minute time frame. But of course, then you should wait depending on which order flow you have determined. So, for example, if you're waiting for internal order flow, right, or institutional order flow, sorry. So institutional order flow, pretty much, the market reaches them for external liquidity more than it reaches for internal liquidity, some sauce, right? And then if you have inner bank order flow, what the market tends to reach for is internal liquidity more than external liquidity, right? So the market reaches primarily for internal liquidity in inner bank order flow, right? Can be differs, right? And it reaches for external liquidity most of the time in institutional order flow. All right, depends on what you're looking for, etc., etc. And I'm gonna show you much more examples of this today. And of course, then you measure the order flow. And if you remember a few calls back, please go check that call out. I'll maybe link it here somewhere. But in that particular call, I pretty much told you guys how to measure order flow. So please check that out as well. So of course, now we are actually looking at the DXY, as I previously said. This is something I would cover. And of course, I'm gonna more or less cover the previous example first, and then I'm cover the new example, which has no hindsight at all. Now, I'm also gonna pretty much tell you all how I more or less got the bias and how I literally knew we would trade higher, as this is something I've, more or less predicted. And I'll show you guys a picture of it, calling this, more or less 3 weeks ago, and I'm gonna link the video here as well. It's the lecture number 7, so I'm gonna link it here as well, which you guys should have checked out before this call, otherwise you won't understand anything. And of course, you should have checked the other lectures, as this goes hand in hand, goes, watching first, second, third, etc., etc. So the first thing I'm gonna overall look for on a monthly basis is, of course, what are we actually reaching for, and what actually determines institutional order flow, and what actually determines in a bank order flow. And as you all know, like I covered in the other video, in the bank order flow, right, is when we reprice, is when we're overall reaching for inefficiencies. So for example, we're repricing this busy, right, this buy side imbalance, sell side inefficiency, right? What we're gonna do is offer buy side. And once we have done that, we're going to reach for the John liquidity, and this is the overall John liquidity. These reticulos right here, and this original consolidation from this market maker sell model. All right, that's an IPTA market maker sell program. All right, it's an IPTA program going lower, right? Reaching for this original consolidation, which is the John liquidity we're looking for, right? So now we overall have determined what is considered institutional order flow. That's overall when we reach for this external liquidity, as this external liquidity is the low. Alright, and this is external liquidity, but also this is external liquidity. So once we actually go for external liquidity, now not intra-week, alright, so if we go for example for a low here, and I'm gonna cover that later, that's not institutional order flow, alright? As then we have not changed the bias, right? And we're gonna change the bias once we have reached OT, as y'all know, because in an inner bank order flow, as is when we're repricing higher away from the institutional order flow, aka when we go up, reaching into this, alright, as that's from the original John liquidity, original consolidation in here, alright, as this is our real John liquidity, right? This is the one we're reaching for later. But before that, we need to reprice, and once we reprice, that's inner bank order flow. Alright? So let's say we took an intra-week low in here, or maybe previous weekly low, particularly this low. Let's say we took that low. Alright? Would that be an external liquidity sweep? No, it would not. Alright? Or maybe it would be an external liquidity sweep, but it would not be considered. Alright? And this would not be considered once we actually reach down lower. Would not be considered institutional order flow, because as long as overall we have not taken out any of these external liquidities, we'll still be in inner bank order flow. Alright, as long as we're range bound between this low and of course yeah, more or less this low, we're gonna be in inner bank order flow, because it's if we reach up higher, we're still gonna reprice this, right? And of course it won't go higher than this, as that's pretty much the overall protected high from the market maker sell model, right? So we're not looking for any high prices than this. And of course I'm just thinking it will reach for the IPTA 2 and then go lower, right? Reaching for this original consolidation, but that's besides the fact. Now let's just dive right into the weekly time frame. I'm just gonna zoom in on this so we have this beside us once we actually go into this, so you guys can check the list while we're actually doing it. So of course now we have determined the institutional order flow and we determined the inner bank order flow. I did this for you guys. It's pretty much finding the original consolidation low, right? And of course then you have number 2, of course, which is the top down analysis, which is something we've started with as well. Alright, and of course you determine the order flow, right? Is it bullish or is it bearish? Now what are we looking for? We're looking for an OTE, because in inner bank order flow, what you guys are waiting for, right, is the price to reprice, and ICT have talked about when it's fully repriced. It's fully repriced once we actually have reached an OT. So for example, you can use a swing high from here, you can use a swing high from here. I would particularly use this swing high to the swing low. So once we have actually reached above the premium, we will be fully repriced. And as y'all can see, I have actually an institutional order flow NGG, which I call the IPTA 2, right? So once we actually reach up higher than that, we're gonna most probably sell off, as that's when we have fully repriced. Alright, and once we actually done this and actually, you know, done a market structure shift down to the downside, we don't really need to do the market structure shift, but actually just reversed above this premium. That would be the institutional order flow going down lower. And as soon as we start the institutional order flow, right, as soon as we start that, we could grade a price swing. Like, exactly, I'm gonna pull up a picture here as well for everyone to see actually how pretty much, you know, I've already predicted this before this move higher, and we're gonna show you on a daily basis here as well, so you can see pretty much I predicted all of this, and this is why I had OT here and then graded price swing down lower, and that's besides the fact. But before that, pretty much what we're looking for now is of course higher prices, right? But to where are we looking for higher prices? Of course now we may be expecting a reprice lower into an OT of this swing low to this swing high, and then higher prices until we have reached a premium, as this is inner bank order flow. Alright, and then we're looking for institutional order flow downwards, reaching for the sell side external liquidity, and of course the external liquidity resting under here as well. Alright, now if include the overall weekly, the change in interest rates, right? Of course, it's not the change in interest rates, it's going to be the news delivery. If you include that, you can pretty much see that on Monday, what's most probable to happen is that we pretty much consolidate. Alright, Tuesday, as I've taught you guys, now we're going to go down to the daily. As I've taught you guys, what we probably will do, right, is more or less create a high. Why? Continuous program. Alright, continuous program. Now, next week highs, most probably going to be on a Tuesday, as we have had a spooling program to the upside. So after a spooling program, there is always going to be a high or a low get or sell in on a Tuesday. In this particular case, I think we're going to have a high get or sell in as we've traded into the IPTA 1, and I think we're going to need to reprice as this week has been such bullish. However, we also most probably will find that we have an SMT here between it and EURUSD, which everyone can see. Now I think we're going to sweep this previous weekly high and then of course trade down lower. So Monday consolidation, hopefully we'll retrace a little bit, engineer a little buy side liquidity here, sweep that on Tuesday, and then continue lower on Wednesday, Thursday, and Friday. Alright, that I got by looking at the change in or the first online dynamic, which of course you guys know as the news, change in interest rates, and the news deliveries. And then reach to an OTE, and of course from the OTE, and everything under here is OT. So then I think we're going to reprice higher, as we're still in that inner bank order flow, right? It has not changed, as if it were to change, we needed to trade down below here. Alright, and that's in the first case, right? We need to trade below here. Alright, if we have reached the OTE, then that's institutional order flow. Meaning if we reverse now, here the institutional order flow would start. As then it starts with external liquidity, as it has not reached its objective yet. Now of course I don't think that will happen, and instead I think we'll reach the OT, and now here the institutional order flow starts, right? So here it actually starts, and then we're gonna trade down lower. Alright, so there's two particular cases, right, of where institutional order flow will start, and it all depends on OT. Alright, as OT is used in an inner bank order flow. Maybe it was unclear in the beginning, but now it's hopefully clear for everyone. Now of course you're gonna drop down to a lower time frame, and all of my previous videos is examples of this, of where I'm actually doing this. So I'm doing a top-down analysis, going through the order flow. You can see how bullish it is, but also how much inefficiencies and relative lows we have left behind. So what I think from a most probable standpoint is that we'll, of course, after reaching this order block on a daily time frame, as everyone can see, but it's also a reprice rebalance on a weekly chart, I think we're going to retrace here, reprice all of this, and then go higher. So what would this be? As this is not institutional order flow, right, as we have not reached down below here, this is actually going to be inner bank order flow in an inner bank order flow. So it's going to be 2x inner bank order flow. So you would call this, if you have a name for it, 2x inner bank order flow. Alright, that's pretty much what ICT would refer it as this is still inner bank order flow, this leg up. Repricing this would still be inner bank order flow, but in an inner bank order flow already established leg. We need to use an OT of this leg as well. Alright, as we're still technically bullish until we've reached the OT or traded down below here. Alright, now it starts making sense. Alright, I'm shedding the light on the real markets now. So let's just now drop down to an intraday time frame. So as y'all know, I think on a Monday we're gonna consolidate. If you go back in the video, you'll see the news, or go on Forex Factory, and hopefully we'll engineer some relative wise, sweep down Tuesday, and of course deliver on from Wednesday down to Friday, deliver down, because I think the narrative is that the Tuesday will be in high, as we need to reprice, and for other obvious reasons. Now let's just go to Euro USD a little bit quickly here. Now I think this will just be in reverse, so you can pretty much see an inverse of what DXY will do. So you can see pretty much that this is our high time frame objective in the form of the original consolidation, and I'm gonna cover this pretty quickly because I've previously called or talked about the DXY. Sell swing, buy swing, higher, right? What I think will happen now is that we're just repricing to an OT, as this is in a bank order flow. So I think we're reaching for this IPTA 2, which is of course an order block a proportional candle or proportional block, depending on what you want to call it. Now let's just drop down to a weekly here. You see on a weekly time frame, what I think will happen, as y'all know, I think we're gonna consolidate, sweep, or maybe not sweep. Maybe you guys are looking for some SMT and such, as students know what this really is. Trade up higher, reprice into an OT, as this is in a bank order flow in an in-bank order flow range. Lower to an OT, and then when an OT starts, or when we have actually reached OT, that's when institutional order flow actually kicks in again, and the central banks is also just buying. And you can see how the central banks is doing if you guys have listened to my COT call. Alright, that's literally how you spot smart money when looking at COT, and you literally see exactly what they've planned. And of course, seasonalities as well, which I've not covered in this video, but I'm gonna cover it in the future as COT. Let's see. Now, of course, on a daily time frame, what we're looking for is, of course, consolidation, manipulation, distribution, and of course into an OT here. The real in the bank order flow starts again, and then the real institutional order flow starts again. And of course, if we now just sweeps this, trade up higher, and trade above this, then the real institutional order flow starts again as well, right? Then the real buys kicks in, the real original consolidation buys, meaning the central banks is reaching for that. All right. And two, you have the narrative for them to overall reposition and reprice again. And where would you get the narrative? Let me just shed a light on this, because I think a lot of people will have that question. Oh, but when do you know where the interbank order flow starts again? Yeah, you will get that from the narrative of, for example, order blocks, favela gaps, etc., in the way. Alright, so for example, here we have an original consolidation. So from the left side to the right side, you'll pretty much spot the reconsolidation in here. Here you can see the next reconsolidation. So when we have actually traded above here, I think we'll start the next reconsolidation, aka an inner bank order flow, repricing, and then trading up higher again. So you get that consolidation. Same thing in here, where we actually, on a 1 minute time frame, you can have like 3x interbank order flows or 3x institutional order flow. Depends, right? But so now we're stuck in a weekly interbank order flow, right? Meaning you can't get institutional order flow in that. All right. And what does that mean as well? Now you know why it's called institutional order flow entry, as it needs to be towards the drawn liquidity. And now you know when institutional order flow entry will happen. They happen once it's directed and near one of the graded price swings, so 20, 25, 50, 75% mark. They happen near the graded price swings. And when do you use graded price swings? In institutional order flow. So now you know literally the whole cycle here. So yeah, hopefully this was insightful. Pretty long call, pretty complicated, but hopefully this was real insightful. Thank you all so much for this call, and see y'all. Bye guys.